All right, welcome to Legal Business Entities. We have Bill Hulsey from our SCORE Boston chapter here presenting. This topic is actually part of a series that we consider the Business Essentials series. It's 12 topics that we feel are important fundamentals for your business success. These are the ones that we have planned for this late spring, early into early summer. And then the series will start again late summer, or early fall. So please look for these topics if you are interested in attending them. But as we start, I do want to talk about the things that SCORE offers to make sure you're taking full advantage. Our goal is to share small business education with you. One way we do that is through the website, score.org. You're going to find podcasts, blogs, previously recorded webinars, templates that you can download, lots of great information. The other way we share educational material is through our workshops and webinars. We advertise those via social media, our newsletter, and they are, of course, listed on our website as well. I think the most important thing that SCORE does, however, is the mentoring. Our mentors are volunteers. They come to us with a variety of skill sets and experiences that they've learned from that they want to share with you. A beginning session, they want to learn about you, your goals, your challenges, and they're going to work with you to formulate a plan so that you can be successful. It's not uncommon as you progress through different mentoring sessions that your mentor could change to make sure that you're getting all the information you need to be successful. Excuse me. So the next, well, the people that we work with, let me tell you that that's a very important topic, I think. We work with everybody. So we're working with those that are trying to decide if they want a small business, those that are in that planning phase, that are in business, growing their business and exiting their business. So we can work with you at any time. Next logical question is going to be, how do I get that mentor? There are actually multiple ways to get a mentor on the score.org website. I think the easiest is to look for that matching box, put in your zip code. That will put you to the chapter that's nearest you. There's a quick contact form that you fill out. We want to know what your business is and how we might help you in this moment. That allows us to match you to the proper mentor. So today, logistics, we are using Q&A. I will also keep an eye on chat, but I do love working through the Q&A tab. It allows me to keep track of the questions that have been asked. And we are recording. Give me 24 to 48 hours and it will be posted on the score.org/Boston website. And from the graphic, you can see it's found under the pull down under local workshops on the blue bar. You'll find previously recorded. So I'm going to go ahead and pull down my share screen and allow Bill to bring up his, and you can begin whenever you are ready, Bill.
Okay, now are they seeing my screen now? I'm always.
No, I don't see it. You must not hit share at the
Oh,
bottom.
okay. Hold on
Yeah,
here.
that's
Thank you
okay.
for your patience, everybody. Oh, now I got it all messed up here. Let's try this.
Yeah, you'll get it.
Yeah, don't call on me, people, for tech advice. Okay. So, Teresa, I am not seeing the share option here.
The on the Zoom bar, are you hitting the green share and then it should pull up a
Is
box?
well, oh, there it is. It was not on the smaller screen. It's on the big screen. So
Okay.
there we go. Thank you for your patience, everyone.
And we can see it. Thank you so much, Bill.
Good. Well, yes, thank you as always. All right. So thanks again, Teresa. Let me just emphasize first that um, we do use teams a lot. It's very common, as Teresa said, to have many, many people working on you and your business because your business has many facets. So you may come with an issue about my legal entity, but end up with a referral to a marketer or somebody that can help you set your books up or whatever. So think of us as a team. Don't be shy about using us. I'd be interested if you can just indicate if you've had a score mentor before, maybe in the raising your hand or something. But we'll get started today. Our goal here today is to talk about these legal entities, the various types, maybe dispel some things you've read on the internet or heard from friends about various entities. I have to make the disclaimer now that I'm not your lawyer and I'm giving you general advice about legal matters. But if you have a specific legal question, it's beyond the scope of what SCORE can do to answer those for you. So you should probably uh, try to find legal counsel if you're in the Boston area. And in most areas, there are uh, free and low cost services. You can always check at a law school in your area. A lot of them have legal clinics where they provide free service, particularly for business and other civil matters. So, check around if you have a question about where you might find some advice. Uh, Contact Teresa and she'll get in touch with me and we'll come up with some suggestions. All right. So today we're going to go over some of the most common legal entities that are out there, and really want you to think about this to reinforce what Teresa said a minute ago as part of the Business Foundation series, particularly your business model, how, and we'll go into this in detail, and your risk management strategy, which is an important part of your overall thinking. I know few of you get into business to think about the back end stuff like this. So our goal is to get this foundation, to use our term, get it solid, get it in place so that you can focus on what you love to do and want to do, which is provide your service, deliver your goods, and make that business grow the way that you want it to. So if you have questions or you're not sure about how sturdy your foundation is of your business, attend some of these other sessions that Teresa mentioned, and then connect with a mentor if you have more in-depth questions. So I like to start here. I get a lot, because I am a lawyer, I get a lot of uh, intake mentoring sessions with people asking about setting up an entity. And I always tell them, well, the entity isn't the first thing that you want to think about. The first thing you want to think about is things related to your business model, how you're going to fund yourself, and so on. So the idea is that the business entity is a conclusion of a set of questions, and not a premise that you start with and then you end up having to fit your elements of your business model to accommodate the entity. You can all Creating a business entity is a very simple process. It costs a few bucks. It can be done online. We'll talk about what jurisdictions are most appropriate and so on. But it's something you don't want to do until you've answered some of these questions, like who are going to be the owners? Are there going to be more than one member? How are you going to capitalize yourself? Where's the money going to come from? How are you going to distribute revenues? Are you going to distribute revenues as W-2 income, as partnership shares? There are issues about taxability. And then for a small group of our folks, there are issues about citizenry or permanent residency, because if you're not work authorized, you can only be an owner of a company, but you can't draw W-2 income from it. And if it looks like you are, and particularly maybe more so even in this climate, you're likely to get audited and have questions about whether you're working illegally. So we want to stay away from that if you're in one of those groups that's here legally, but you're not work authorized. So we're going to start going over just a set of the options, kind of from the most common and the simplest to a few more complex, and then we'll talk a little bit about. We'll kind of circle back around and talk about some of the tax implications and so on. So many of you, if you're in business now, you may be operating as a sole proprietorship. So I'm going to distinguish a sole proprietorship from a single member LLC. A lot of people use those terms interchangeably, but a sole proprietorship is where you don't have an entity, an LLC or a corporation or something, and you are the business, right? And your income is taxed directly to you, your expenses, you're probably filing Schedule C on your IRS Form 1040, and you and the other folks working on the business are either a sole proprietor, or if there's more than one of you as owners, maybe you're an informal, non-registered partnership. So it's not a great strategy in most cases. I know there's some costs that we're going to talk about, but one of the main benefits of considering some sort of entity, as we'll talk about, as part of your risk management strategy, among other things, is that you, as a sole proprietor, you are individually liable for the actions of the company. And that means your personal assets are individually at risk. So if you own a home or something and something goes wrong and you get sued, the person suing you can come after everything that you own. And we don't want to put those things in play. So that's what leads us to the most common form, and one that fits 99% of the people that I've talked to in 6 or 7 years, and I think is by far the most accommodating entity choice, which is called the limited liability company. Now, there are different states and slightly different rules. We'll talk about that a little bit, but my uh, foundational basis here is for Massachusetts. So most of the guidance I'm going to give you, I'm sure applies to Massachusetts and most likely applies in other states, but may not. So the first point here is that you can be that single member LLC, which is you're the only person that owns the company. And but again, now we've insulated all of your personal assets from liability for the actions of the company. So if you're a plumber and somebody sues you for claiming that you misplumbed a house and the whole basement was flooded, that's only going to be able to come after the assets of the company. A multi-member LLC might be where you and other people who are working on the company or people who are uh, have a financial interest in the company are involved. And in that case, those people will be listed, but you'll be treated as a partnership for tax purposes. But again, everybody's going to be behind that curtain of liability, the limitations. The LLC is a pass-through entity, which means that the LLC is not taxed. So, and we'll talk about a C Corp later where the entity is taxed, but the LLC is not taxed. So all of the taxation is going to come to the individual members. And if you are a single member LLC, and you may be doing this now as a sole proprietor or a single member LLC, you're going to file Schedule C on your Form 1040. Um, if you, if all the major tax packages, software packages have a home and business option that I use, for example, for my legal practice. And it's very simple. They just take you through the normal questionnaire asking if you have any business income. And so it's a very simple, easy way for you to get the liability, no individual additional tax burden. And you get all that for about $500 a year, and we'll talk about that a little bit. Again, it provides statutory and common law protection. Um, let's see. Whoops, I'm sorry. The If you are a multi-member LLC, you're going to be taxed as a partnership. And one of the things we'll talk about below is the idea that we want to make sure you have an operating agreement, which is a contractual document between you and the other members explaining how you're going to work and how you're going to divide your profits and so on. But a multi-member LLC is going to file what's called a K1. They'll get that from the company and that will report what's known as partnership income. So there are two little variations on this in Massachusetts, and different states do this differently. But a professional limited liability company in Massachusetts is a company that is in certain licensed professions. Doctors, lawyers can be this. Anything that's in a license where you have to get a license from the state. I think in Rhode Island, if anybody here is from Rhode Island, you, if and you're in a licensed profession, you actually have to set up the PLLC. But if you have a question about that, you can double check or again ask Teresa and she'll get you in touch with me and we'll look at it. But again, the one benefit to a PLLC is that if you're in a field where there's the potential for malpractice, medicine, dentistry, attorneys, and so on, it insulates each of the members, the professional members, from liability for the actions of the other members as well. So you not only get the global protection of the limited liability company, but you're not on the hook if one of your partners commits or is alleged to have committed malpractice. Any questions there before I move? Okay, so now we're going to go up the complexity chain a little bit. And a lot of you have heard of the standard C corporation, which is a corporation that allows you to issue shares. So back to my earlier point, if you are thinking about capitalizing your company by uh, getting money from people, you don't have to register those through the SEC, but you can find a way to issue shares to shareholders in exchange for their money, and that's a different model. The primary downside to the C corp, of course, is the corporation is going to be taxed first, and then distributions to the shareholders or employment compensation to the members of the C corp are going to be taxed as well. So you get that double whammy. It I don't see many score businesses, despite what you might read on the internet and everywhere, where this is a good approach. If you are in the kind of rare situation where you're building a company that you think might be attractive to be acquired by a venture capital firm or some group of outside investors, they'll want you to be a C corp, but you can always convert from that LLC to a C corp when that comes, and in the meantime, have avoided some of that taxation. That if you've got a good revenues, that can be a significant difference. So there's no limitation on who can be a shareholder. You don't have to be a resident alien. You don't have to even belong to the United States. You can be a corporate investor, like as I said, a hedge fund, a venture capital group, or anything like that. So it's a flexible model, but it's not. It's too much for many people that are, delivering the service themselves or have a smaller company. So the professional corporation is a variation on the professional LLC. It looks like a corporation, same double taxation, but it's another way for uh, professionals, register, registered organizations or professions, people that have to get a license to set up in this way. And there are some advantages to it. But the main one is, again, you're insulating yourself from the liability of the other members of the corporation. So another one that comes up, it was a wave that kind of came and I think crested. I don't see a lot of it, but it's called the benefit or the public benefit corporation. And these are kind of like, and we're going to talk about nonprofits in a minute, but the benefit corporation are for-profit corporations in and they aspire to some different goals. The primary fiduciary duty of a corporation is to enhance value to the shareholders. And if a corporation is doing things like paying beyond market salaries or more benefits, or making donations to charitable causes with corporate income and so on, in the grand scheme of things, that is not doing the best for the shareholder, and shareholders can uh, claim that they're not being treated properly and sue the corporation. But under a benefit corporation, those rules and those expectations of the shareholder are relaxed. So the benefit corporation has a broadened fiduciary discretion. They can make more decisions about, part of our mission is not just to sell widgets or deliver services. For example, let's say I'm an accounting firm, a professional corporation accounting firm. I can say, we're going to take 25% of our business is going to be pro bono accounting for people that can't afford to pay our accounting fees. So the shareholders would say, okay, we get that. We bought into that model, and we accept the fact that our returns are going to be lower because a big portion of our income is not going to be realized because we're doing this pro bono work. The downside to it, in addition to having to become certified as a B Corp, is there's formal regulatory oversight by the state. You have to be a little more transparent in your financial records and books, and increased accountability, because you can't claim the benefits of the B Corp and then not do those things, because then you're potentially leaving your shareholders not in the position they would be in if it was a regular corporation. So then the next one is, a partnership. Sometimes there are tax advantages that we really can't dig into here today, but there are sometimes benefits to having the old, like law firms used to be partnerships and accounting firms and so on. There are partnerships where there are general and limited liability partners. A lot of times you'll see realtors not realtors, but real estate developers. They'll create a partnership where there'll be a general partner who'll be running the organization and building the building, or running the building, or a set of buildings. And then there'll be a set of limited liability partners who are just there to provide capital to the organization. Um, these things are a little more complex. You do need a lawyer and an accountant, one at least, if not both, to walk you through the details of that. But they're out there for you. And if you're in a situation where you're thinking about raising capital in a way that particularly the C Corp or one of the professional variants or the LLC won't accommodate your funding model or your governance model, then this might be a different way for you to think about that. So I'm going to take a small detour for a moment. A lot of people come to me over the years and say, we want to form an S corporation. So there is no such thing as an S corporation. An S corporation is a tax status that you elect, and it's available to certain entities like LLCs, like certain C corporations, and so on. But you have to be an entity first, and the S stands for small, or small business. So this is an element of the tax code, the IRS tax code, where you can elect, you go to the IRS and you say, I meet these criteria, and I don't want to, if I'm a C Corp, I don't want the double taxation available that would incur if I were a C Corp. And or I'd like to be able to treat my income not solely as wages. I'd like to be able to treat some of it as distributions. That's this final part, because there may be some tax benefits. I may be in a very high wage tax status, but my capital gains are fixed by statute and may be lower. So the limitations are, no more than 100 shareholders. The shareholders must be people, U.S. citizens or permanent residents. So no H visas, no J's, no F's can be shareholders, and obviously no VCs or something like that. You get the same limitations because your entity status hasn't changed. You can have non-working shareholders, people that are just investors. Um, and again, there may be tax benefits. These aren't really, it's not really worth it unless you're making some pretty significant money. And if somebody's making $100,000 a year, let's say you're a single member LLC, and your gross revenues are 100,000 a year. That's good for you. But if you try to go to the IRS and say, some of this is wages and some of it is a capital distribution, and I want to be taxed at a lower rate for that, you're increasing pretty significantly your likelihood of being audited. So again, it's a question you want to have before with an accountant or a tax attorney before you move forward. But it's really something that's worthwhile to people that are making pretty significant money, and within that can allocate a kind of a reasonable amount of the income to wages, because that's going to be the trigger. If you say, well, I made $100,000 and my wages for the year were $1,000, and the rest of it was 99,000 was capital gains, so I get the lower rate. You're going to be talking to somebody from the IRS before too long. So get some advice on that one, but just remember that there's no such that you can't form yourself as an S corp. You have to form yourself as one of these entities that we talked about earlier. So now we'll kind of jump to the other side just to make sure that we've covered all the bases in terms of legal organizations. A lot of times people come in, and this goes back to the first point I was hoping to make, which is your business model is going to tell you what kind of organization you should have. For example, if you want to deliver counseling services to people, but your desired population doesn't have the money, may not be have access to health insurance, you may decide you're going to want to be a nonprofit and see if you can leverage funds from philanthropic organizations or other places that see your mission as a goal, even though delivering counseling services in another context would clearly be a for-profit business. So you want to ask yourself as part of, and obviously there are some things that are not going to be nonprofit, which are things that are for the public benefit or the good of the Commonwealth. Like it would be unusual to see a nonprofit plumber again or house painter or something like that. But there are nonprofit beauty salons for people that can't afford that or that are trying to get back in the job market and so on. So it can be broad, but it's conferred by the state. There's a two-step process here. One, you get your recognition from the state that you're in that you are a charitable entity and you're doing work that the state recognizes is in the public good. One of the main restrictions on nonprofit organizations is that the profits can't be distributed to the individuals. A lot of times, well, not a lot, but sometimes people come and they think they can set up a nonprofit and not pay taxes on their personal income, and that's not the case. But you can be paid very well. I always tell people the president of Mass General makes pretty good money, and the president of Harvard makes pretty good money for running nonprofit organizations. So the income can be commensurate with the complexity of the job and the size of the nonprofit. So after you get your state recognition, you're going to go to the IRS, Internal Revenue Service, and seek recognition as a tax exempt organization. So the tax exemption is granted by the federal government, not by the state. And there are two paths here. One is the standard Form 1023, which is pretty complex, and it's made for organizations that expect to be receiving revenues around 50 to $100,000 a year or more, and that they get more complex as you go up. But if you're just starting out and you're a smaller community-based organization, there's a simpler form that you can use called the 1023EZ. And I always ask people to look at that, and we've got a great team of nonprofit uh, advisors, just as we do on the for profit side, who can look at this with you. It's a much simpler form. You can get your recognition a lot quicker. It's much shorter. So it's always worthwhile. And Teresa can direct you to some members of our nonprofit tax practice group. If you're thinking about starting a nonprofit, or even a for profit, get with somebody to really walk you through your business model and your business plan a little bit and decide which of these entities is going to be best for you. So, on the trade-off for being a nonprofit is because you're not paying income tax, you're going to have annual publicly available filing records, which are basically an it's like a tax return, but it's for nonprofits. And you're going to be required in a way that for profits aren't required to disclose a lot of financial information about your organization. And the two ways you do that in mass, the federal form is the Form 990. There's a simpler form there too, where um, you know, down to a postcard, basically, depending on your revenues, up to a very complex multi-stage form. Again, Mass General or Harvard, their 990 is well over 100 pages long, because they've got a lot of different places money's coming from and going to and so on. The other form that entities, nonprofits often forget to file in Massachusetts is called the Form PC for public charity, and that's filed online again with the Mass Attorney General's Public Charities Division. So again, get with us if you're thinking about that or any of your models, and let's make sure we've got you set up and that you understand not only what those requirements are going to be, but what it's going to cost. If you're going to have to pay for an audit, if you're going to have to pay somebody to do your taxes on the for-profit side, those are costs that you want to build into your model as you're building in your pricing and so on. Okay, so moving away from specific entities, the I get a lot of this is another, I feel like part of this is just sharing with you some crazy things I've seen over the years. Let's take the most likely case that you're a Massachusetts business doing Massachusetts business in Massachusetts. There's really no reason for you to form your entity in Delaware. There's a lot of noise on the internet now about forming in Wyoming because you don't have to disclose the principles and so on. But that's not really going to get you anywhere. If you're doing business in Massachusetts, you have to be registered as a business in Massachusetts. So the simplest way to do that is to go, and you can see the website link I have at the bottom, nolo.com. You don't have to pay them, but they have good instructions to go to the Mass Secretary of State and file the appropriate forms to set up your business and do what you need to do to get a tax ID and so on. So it's simple to do. Don't outthink yourself, because if you set up in Delaware, for example, thinking that's cheaper or so on, but you're doing business in Mass, you're also going to have to pay to register as a foreign entity, a Delaware entity, doing business in Massachusetts. So you're not saving yourself any time. You're going to file your annual reports and so on. So the kind of the first step in the process is to go and check. There's a website if you're doing Massachusetts, but it's true in any of these jurisdictions. And see if the name that you want, which may be tied to your branding, or you may be thinking of your name as a trademark. And we've got some good trademark attorneys and so on to help you think about that. And you can reserve the name for 60 days, and that gives you a period of time to get your filing ready. And otherwise, it's just a simple form that you go through and you provide some information. If there are more than one member, you you're going to give them the names of the other members. One question that comes up is when you see the question here about a registered agent. The registered agent is an either a designated person or a designated company that third parties, including the state, can know to contact if they have official business with you, if they want to serve a legal complaint on you, if the state wants to notify you of a tax assessment or whatever. And sometimes people don't like to list their personal address as that, but you have to have a physical address for your resident agent. You can't use a post office box. I think places like uh, FedEx and some of these companies that offer business services, they will give you a resident address, but you if you don't want your personal address to be available on this online filing for your LLC or your C corp, you're going to have to pay for one of these entities. It's not a lot of money, but it is something. So just again, if you have I send people to this Nolo site probably weekly, telling them you can do this yourself, and I think in 7 years I've had one person come back with a question. So they're very simple, very straightforward. And obviously, if you do run into a question, um, make sure that you give Teresa a call, and she'll get you in touch with the right person. So now, just boring down a little deeper in the last couple minutes of my presentation, here are some things that you're going to want to uh, have in place. One is if you're a multi-member LLC or a partnership, you want to have what's called an operating agreement or a partnership agreement. And this is a legal contract between the members or among the members and among the parties or the partners that explains the rules and the rights the parties. We have some templates available that you're welcome to look at and talk about. Again, if you've got something really complex, you're probably going to want to try to either talk to a lawyer at one of these law school clinics or some other resources that we have, or if you've got the money, you'll hire a lawyer to do that. But it's an important document because in part it talks about how income is going to be distributed, but as importantly, it talks about what happens if the relationship is going to dissolve. Somehow one of the partners wants to move on or it's not working out. You guys can't agree. I've had several where, people start out with the best of intentions to work, and over time they have different management styles. I mean, it's not unlike relationships, I guess. So I sometimes say it's like a business prenup where you're identifying the goals of the partnership and what the rules are going to be. If you're going to have a corporation, whether for profit or nonprofit, you're going to need to have bylaws, which are again a set of rules that explain the officers, how votes will be taken, how members will be admitted and removed, and so on. It may talk in the for-profit case about distribution of assets and so on. If you are issuing shares as a corporation, uh, you're going to need to have a stockholders agreement, and these it's not really wise to take these off the internet because parts of it are pretty complex. And anytime you're issuing stock, there's some pretty significant disclaimers that are required to make sure that you're not part of you're not subject to SEC rules because you're not publicly traded. And sometimes, depending on the amount of stock being issued, there are disclaimers about what's called a sophisticated investor and so on. So you'll if you're in the situation where you're considering a C corp model or a share issuing model, make sure that you get that. I didn't include this here, but if you are if you're an LLC or another entity and you're going to have people capitalized that aren't going to be active members, you want to have some sort of agreement that specifies how those people, the terms under which you're borrowing that money, if they're lending it to you, and the terms under which you're going to be repaid. Some of you may have heard or have opportunity to consider what's called a SAFE agreement. It's an acronym, SAFE. These are standardized models for kind of interesting, responding to smaller for profits where people want to make a capital investment. Uh, and it spells out the terms under which and when the entity will be required to repay the lender in that case. And you see them every once in a while. They're useful for a certain type of thing. I not really what we can get into today talking about entities, but if you, as part of your capitalization, you're thinking about issuing shares or you're talking to somebody who's proposed a safe agreement, again, go through Teresa and she'll get you in touch there. The EIN you'll see from Nolo or wherever you go is you get that from the federal government. Single member LLCs are not required to have an EIN, but I think it's always good because we're going to want you to set up a separate bank account for your business expenses anyway. So you might as well get that LLC and get an EIN for the LLC. Again, just another way to tell the world my personal life is distinct from my business life. And this may be the last. I don't know if this slide. Yep, this is the last slide. So the other thing is, I get a lot of people who say, I have a business certificate or a doing business as a DBA certificate. That's not a legal entity. That's just telling some regulatory authority, usually the town that you're in, that you have an alias. So Bill Hulsey could have a DBA as, biglaw.com or something. But that doesn't give you any legal protection. It doesn't have a legal status. So don't, even if you, and to flip it, even if you have an LLC that's operating under a different name, sometimes an LLC has 3 or 4 lines of business, you can register the various lines as a DBA where the LLC is doing business as Bill's Knitting and Hardware Company or whatever. So, but the DBA, again, just to stress it because I see it so often, no legal no legal protection and no legal status. So that's my presentation. Let me just reinforce everything that Teresa said for sure, and let us get a team behind you here. I'm going to stop sharing, Teresa, right?
Oh, that's fine. Yep. Uh, oh, somebody's asking to reach out to you directly. If you would take a question via
Yeah,
email,
yeah.
maybe.
uh, I can try to put it in the chat. Would that be right?
Yep.
Let's see here.
And then I have another question when you finish with that.
Yeah, it's just I gotta double check because my keyboard, it's kind of like me, only does certain letters. Okay,
Okay.
far away. Yeah.
Yeah. Can you clarify if I have an EIN as a household employer, do I need a separate EIN for my small business?
Yes. It's a separate entity. It's a separate legal person.
Okay. Will I be sending slides out? No, the recording will be posted for you to watch again if you needed more additional information, wanted to rewatch it or revisit anything that was presented today.
Hmm.
And that will be posted. I'll put that up again, but it will be posted to the score.org/Boston website. And it'll be under, you'll see previously recorded webinars, and that's under the local workshops um, pull down there
Hmm.
on the blue bar for everyone that wants to see that. And I can put that into chat as well. Okay. I guess I don't see any other questions, Bill. I think you must have.
Well, that's good.
Yeah, I think that means that you
We've
covered it
covered all
all.
the bases. Yeah, well, again, reach out as things come up. We're here. We're 85 strong, and we're here to help you.
Okay, great. All right. Well, thank you, Bill. And
Yep.
oh wait, there's not seeing Bill's. Oh, because it went to host and not everyone. Let me put that in there. It's just, yeah. I got it. I got it. I got you covered.
Once
We're good.
again, once
We're
again.
good. Okay, great. All right. Thanks, everyone. And we hope to see you on the next business essential topic, which is going to be the financing a business on May 20th. So we hope to see you then. Thanks, everyone.
Yep. See you, Teresa.
Bye.